Good day, traders. This is Mdlalose with another daily Forex update. Yes, the time now is 9:21 in Johannesburg, South Africa. Good morning all over the world if you're watching this video, and thank you for tuning in. But before I go ahead, I have to say, if it's your first time watching my channel, please make sure you subscribe and hit the bell notification button so that every time I post a video, you are the first one to watch my video, and don't forget to share the video with other traders. Okay, let's get into it. Today I have to say the markets moved before I started trading, even though I managed to squeeze a few pips out of the markets now this morning. Yeah, I've already squeezed a few pips. That's why I have the time now to actually take this video. But I have to say, you know what, when the market moves before the session opens, to me as a trader, it makes me very uncomfortable. Even when I take a trade, I'm a little bit, you know what, I'm not that much cycled, because I don't like to see the markets doing this before I start trading. You know, I hate to see these big jumps before I start trading, even though the markets can potentially continue that direction. But personally, I like to come in when the markets are flat, when it's what we call accumulation phase. Okay, the accumulation phase is when the markets are basically moving sideways, as indicated right here. That's what we call an accumulation phase. Yes, there was an accumulation phase here, which is why the markets actually started breaking to the upside. It means that they were accumulating buys, not sells, because if they were accumulating sells, the market would have gone down. But accumulation is going to be my next topic. My topic for today mainly is a continuation of my video that I did yesterday about the currency strength meter, another technique to use the currency strength meter. If you did not watch that video, please go back and watch the video that I posted yesterday about the currency strength meter, so that you can understand this particular video that I've actually that I'm shooting right now. So let's get right into it. So today, as I said, that I've squeezed a few pips out of GBP, even though I was a little bit edgy and you know, I wasn't really impressed. I have to say, I've, you know what, grabbed around 60 pips already this morning, which is, yeah, very good enough for me. It's actually good enough in terms of the money side of things. So I'm a little bit happy, even though where I got out, the market is still going up, and I'll show you the trades that I've actually taken this morning. But before I do that, let's actually go through the technique that can be used on the strength meter, or the trick that I just want to teach you today. Okay, so when you're looking at the strength meter, right, you need to focus on mainly the zero line. Okay, I know I've never ever taught you guys about the zero line in any of the videos that I've actually posted online, but when I'm talking about the zero line, I'm talking about this zone right here. Okay, there we go. You can clearly see that is the zero line. The best trades, this is very important. You can put this on your notes if you're using the strength meter, or do whatever, but this is very important. The best trades come when both currencies are closer to the zero line. I'll repeat again. The best trades when it comes to strength meter trading, they come when both currencies are closer to the zero line. Okay? What do I mean by that? The best trade comes when the currencies are closer to the zero line and they start diverting. If I'm talking about diverting, I'm talking about this, right? This is what we call diverting, right? But you can clearly see this morning the dollar and the NZD, which is the white and the blue line, or the white and the green line, you can clearly see all of them, they were closer to the zero line. That's where they started diverging away from the zero line. That's very, very powerful. You can get, see, they're diverging, but this one is above the zero line. GBP is above the zero line here in this case, right? Which is the reddish line, and then the brownish line is the cat. They are both above the zero line, and they're diverting, diverting. So there is a trade there, or a potential trade, but it doesn't give you a higher probability than when it does it near the zero line. Very, very important. So when you focus on any trade, focus on where the market start diverting close away from the zero line, the other one strengthening, the other one weakening. That's when you get good, clean, quality trades. Like GBP CHF today. This is actually on GBP yen. Yes, this is on GBP yen. You can clearly see GBP started diverting above zero line, and yen was already way down there, already weak from this morning. Yeah, potential good trade, but for me, yen was a little bit far, even though I took it. That's why I said the trades that I took today, I took them and I exited them, you know what, very, very quickly, because of what I had seen. This is exactly what I'm talking about. This is where I took the GBP yen. Okay, can clearly see my buy right here. Just want it to be easier, and then you can clearly see where I exited. Other people say, yeah, Sunny, you left a few pips. That's okay, because I exited because of what I'm explaining right now. So this trade I only made 21 pips. It wasn't really that much attractive, but it's okay. 21 pips times 3 trades that I've actually entered, that's 60 pips. That's good enough for me for the start for the day. Also, the reason why I got out very fast is because already when I woke up, the market had done this. You know, I only jumped in when it's doing this. And to me, I don't know. I'm a little bit skeptical about this trade, because where it is right now, it makes me very, very uncomfortable, because when the markets do this, sometimes there's a reversal. I might be wrong. It might continue to go up. Guess what? It's okay, because I have taken my share out of the markets for the day, and I'm not really bothered, because yesterday it was the markets were actually jumping up and down because of the bank holidays, so it wasn't really a good day to trade. I actually stayed away from the market. So this is GBP yen, and then let me show you another trade that did that closer to the zero line. We can clearly see now this is going to be a good one. Not the best bet, but no, this is actually going to be a good trade. Euro against the GBP. This is very, very important. You can see this is euro, this is GBP. Now let's go focus on euro GBP. There we go, bam. Look at this move. Look how clean this move was. It wasn't really that much. I mean, for 16 pips, euro GBP doesn't really have a high ADR or average daily range. So for it to do 1, 2, 3, 4, 5 candles shooting down, 1, 2, 3, 4 candles shooting down, I mean, that's nearly what, an hour. You know, that's nearly an hour. The market's pointing in the one direction. Even if you're scalping on a 1 minute chart using the hourly trend, you've already made money on this trade. Yes, you've made money, because there is a strategy that I'll teach in the future, where you can scalp 1 minute charts and looking actually at the 1 hour direction. I think I have posted this video. If you search on my channel, you'll find this video where I was scalping the 1 minute charts, the hourly trend. So already you've made money. That's very, very important. But what I want you to understand is they were closer to the zero line. Euro GBP, they were diverting closer to the zero line. That's how you had that big jump. So anything that actually starts diverting from the zero line gives you a higher probability trade. You can get trades, yes, when the markets are wherever and however. If I can just, you know, scroll back a little bit so that you see what I'm talking about. Maybe give you one more example. All right, here's another example. I don't know what happened here, but I can tell with the strength meter there was a possible lovely trade around about here. Let's actually put it here on Aussie dollar. This is the dollar, and then this is the Aussie. So if you go AUD USD, right, bam, look at that move. Look at that move. That was how many pips from that entry to that lowest low. That was 33 pips. Come on, guys, 33 pips or whatever, 25 pips, whatever, wherever you could have closed, because exits are the most difficult. I don't want to lie. I've been a trader for 9 years now, and you know what, the most thing that I've battled with in all of my years of trading is actually knowing when to say, okay, right, I'm taking the money, I'm walking away. That is the most difficult part of trading. There are things that can be used and blah 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 blah, but yeah, the video is coming in the future. Don't worry, I'll show you one of my techniques that I exit. But you can clearly see Aussie, this is our zero line, by the way. This one, this is our zero line, and you can clearly see right there on the zero line, that's our dollar, and then that's our Aussie shooting down. So you can clearly see on these two lines, you can clearly see that when they were diverting away from that zone, you had that good trade. So you can trade from any other level, it's okay, but the best trades come when the markets are closer to the zero line. So this is a trick that I wanted to show you guys today. Tomorrow I am going to be talking about accumulation and you know what, distribution and stuff, but it's a video that I'm going to be showing you tomorrow as well, so that you can understand when the market is is on an accumulation phase, when it breaks and there are confirmations via the strength and the volume that you're actually in a safer trade, because it means that, you know what, the big guys or the market makers or the banks or the people with big pockets, they were actually accumulating buys and sell. Mdlalose, hope to see you tomorrow on my daily Forex video update. Have a blessed trading day. Goodbye.